Congratulations.
Yeah,
I
amazing
s-
deal. I couldn't even believe it. He's claiming the point of sale credit, and it's coming in under 40,000 for the Model Y long range. I think maybe 45,000 with taxes and everything, but pretty incredible deal.
yeah, I see a lot of new Teslas in Austin. Lots of new Model 3s, Model Ys, Model S's, Model X's with no license plates, temporary license plates, temporary registrations. So, deliveries are rising. And they said on the earnings call 90% of deliveries in 2023, 90% of deliveries were to people who did not own a Tesla before, which is an incredible statistic.
Yeah, and you hear all these people who are frustrated, who want to do something about the stock price going down. They go, nobody knows. Nobody knows. When in reality, 90% of 1.8 million, so, about 1.6 million people bought a Tesla who had never bought a Tesla before. And yeah, of course, there's a lot of misconceptions, but the idea that people aren't finding out about the product or, people don't know about it. I mean, clearly, at least a few people know about it, enough to make it the best selling car in the world.
Yutzi, how are you? I do want to talk some macro, but Machine is not here yet. Hoping that he joins us before we do that. So let's get some initial comments by Omar. Omar, how is FSD V12 doing for you? Any additional observations?
Well, it's good, but it's also bad. So, as I've used it more, I've seen more of the issues pop up. It's obviously incredibly smooth, incredibly accurate, just really doing some great stuff. Also doing some strange stuff. I had um an example yesterday where I was up in Corte Madera because we had to go to the DMV. And so we went to the DMV there, and the car was driving, and it had to get on the 101 South to get back to San Francisco. And it accidentally got onto the 101 North ramp. So normally it would just maybe get on the 101 North and then turn around, but it decided to turn and drive out and get back on the street going straight in the direction it was going by driving down like the area that people would use to get onto the freeway, like the on ramp, like driving the other direction and going forward. So I was like, okay, that's, obviously not the way you're supposed to drive. So it's kind of like that other move, except worse because this was kind of, going the wrong way. But it was kind of human in a way, like just trying to do whatever you can to get back on the route. But it was also a little bit sketchy. So I think this is kind of the really interesting thing about just training on real human driving data is that you're going to pick up a lot of really good behaviors, but you may really need to curate the data set to avoid some undesirable behaviors, like doing some crazy, human like moves to get back on the route. And I do have it on the assertive profile, so I don't know if that affected things or not. I might try it in the average profile and see if that's a little bit better.
Oh, thanks, Omar. Any comments on GM results? They came in a little higher than expected. They have a buyback program going on now. They're going to reintroduce the dividend. The stock is up 8%, $53 billion market cap, 5 PE ratio. What are your thoughts?
Well, I thought it was interesting that they're actually expecting their profitability to decrease potentially. They gave guidance of like 9.8 million, which is a little bit below the 10.1 they had, to I think 12 billion. But then you look at, for example, Cruise, they said that by winding down Cruise, they're going to save $1 billion a year. They've been spending about 2 billion a year on Cruise. So they're going to save $1 billion a year. That should pretty much go straight to the bottom line, but instead they're saying there's a possibility that earnings could decline in the coming year. So It is kind of a really interesting situation. I mean, the market might like them cutting back on cruise and saving $1 billion there, but ultimately they by abandoning EVs, really walking back EVs, walking back autonomy, they're really sort of selling out their future. I mean, this is the kind of thing where you want to commit to it year after year, despite what's happening in the media or how capital markets feel about it. That's how you really build a sustained advantage. If you're just doing it because it's the, buzzword in the market of the year, and you're not willing to commit to it, even when that sort of hype goes away, then you're probably not going to be very successful long term. I mean, you look at Tesla increasing their spending, billions of dollars spent on training compute, new data centers, new Dojo data center, at a time when their margins are being squeezed and they're still making these huge investments into the future. And then you look at GM and, they've sort of given up on the future. It seems like their sort of message to the markets about autonomous electric vehicles was mostly just a lot of smoke. And the business has sort of returned to its bread and butter of just selling large ICE trucks and SUVs.
All right, let's check to see if Machine is here. You would see, doesn't look like he's here. So um, if you don't mind, I'm going to move you down to listener while we focus on Meta.
Oh, if you're going to switch topics, I can come back later. I was just going to.
No, I don't want to do. I don't want to do a macro before Machine gets here. So let's do. Let's focus on. But go ahead. Do you have any questions or comments on V12 or GM results?
Not GM results, but on V12. So you posted an interesting paper from Abacus, Omar's, or sorry, Omar. I don't know why he calls you Omar's. Um, and in there, they kind of show how, the industry in general, there's a lot of other papers going in the same direction of using direct or directed or whatever you want to call it, policy optimization, or whatever other fancy words everybody's using, preference, etc. This approach is more applicable to Tesla than just the pure human observation approach. So I know oftentimes it's easy to say like, oh, it looks like they're just looking at what humans are doing, and so the vehicle's gonna have a hard time maybe doing more directed policy stuff. But they can detect the direction of the road. They can say if you go the wrong way on the road, you get negative 100 points, etc. So there are a lot of direct policies that they can start enforcing, including things like if you detect a stop sign and you didn't hit zero, minus 50 points. So it's kind of like a gamification, and they can go in there and they can directly give exact points based on what they want to steer the model towards. And then they can let the rest of the space be discovered based on human observation. So I think it's just that might be one of the things that they're trying to like finalize, get all the policies that NHTSA requires, all the like really strong safety things that they may have observed in. And this is kind of like heuristics, but it's more on the training side. And once that's done, in theory, uh, you shouldn't see that kind of stuff happening anymore. So I don't think it'll be as hard as it seems at first.
Yeah, I mean, we'll see how hard it will be or won't be. I don't necessarily think it's going to be hard. I'm still super happy with V12. When you turn it on right away, you notice the smoothness on every drive. Like people who I've given rides to, they comment on it right away. But obviously, as time goes on, I'm seeing more of those sort of more rare bugs. And I didn't necessarily see them at first, but I'm saying, okay, there are still a couple things. That's why everyone doesn't have it yet. But, I'm sure there's another build coming. And that's really going to be interesting because then we'll be able to really see what the rate of improvement is, maybe try and figure out what the slope of the curve is a little bit. And, there's issues like this to be expected when you have an early build and they say, look, this isn't ready to go out to everybody. But overall, I mean, it's obviously a breakthrough. Um, and like even what it did wasn't like wrong per se. I mean, it was probably illegal, but it was it didn't hit anything. It wasn't harmful. There were no cars there. So like might have done something like that if there were like no cars there, you know? So it's kind of interesting. It's, there's some improvements, some optimizations that need to be done, obviously, but you can really tell that this is a breakthrough. We'll find out what the slope is, how quickly they can fix it, but I'm sure there's actually probably another build rolling out soon. We even saw something in Tesla Scope, like a point 13 build or something like that. And I wouldn't be surprised if that goes out this weekend or something like that. And I wouldn't be surprised if the next build also comes with a much bigger expansion to a much wider group of testers, maybe all the early access testers or something like that.
Any other questions on Meta, on V12 comments, Omar?
Oh yeah, one last thing I'll say is like, so I was driving V12 yesterday and I was also taking Waymo because I had to go to this WeWork location and I said, I don't really want to deal with parking or whatever downtown. So I'll take a Waymo there. And I was just noticing that the end-to-end V12 is just sort of leapfrogging the Waymo driving feel in my experience. Obviously, Waymo zero take over every time. That's not what I'm experiencing with FSD 12. With FSD 12, I'm seeing it can do curb to curb, no intervention a lot of the time, maybe even most of the time. But there are still some takeovers, some accelerator presses in this build that I'm seeing. But with the Waymo, you're seeing like this level of jerkiness. Like, so I got in the Waymo and it was going up to the intersection. It kept stopping and going and stopping and going. And there was like a guy on the other side of the street or something, maybe, or some cars coming. But it had, it was perfectly clear to make a right turn. It kept stopping and going, stopping and going. And like you can see the wheel turn, it's like jerking a little bit and I'm like, yeah, this is like how FSD 11 would drive too in a way, and we just kind of accept it as like, okay, well, autonomous vehicles are just like that, that's just how they are. But with V12, you're really sort of seeing them leapfrog that into an incredibly smooth and human-like feel. You don't have a lot of those sort of robotic jerking back and forth type of decision making processes. Everything's like a much smoother gradient, if that makes any sense. Instead of slamming on the brake, you're just slowing naturally and picking up speed again in a way that's just much more comfortable. And I think it's amazing that, just taking a driverless Waymo, you can actually see that they're doing something there that's resulting in a smoother driving feel, whether it's the amount of data they have or the architecture of their model or whatever, I don't know. But that's just sort of an observation I had.
All right, thank you. We're going to switch some gears today. I want to learn about these semiconductors a little bit. So if Wes is available, please come up to speaker. And if Henry is available, please come up to the speaker. And then we can have and with Omar and Meadow on the board, we can have a really good discussion.
Is it okay if I switch to unmuted and then I use my car to unmute?
Yeah, that's fine. Yeah, go ahead. You can do that. No problem. Yeah, people do that all the time. So Meta, you believe, help me understand this. You believe that there's going to be tremendous demand for AI training and for chips that do that well, as far as the eye can see. And you believe that most of that training will be done on Nvidia chips, and yet you don't own Nvidia stock except for maybe some ETFs, right, or some funds.
That's correct, but I think part of that is because of the sky-high PE that Nvidia has. While I do agree, and I've heard you say this is a bad way to think about it, but this is how I think about it. I usually look at the PDE and I say, am I willing to hold it for that many years? Because that kind of reflects the time to double in my mind. Or do I think this business is going to be as steady for that entire period of time? And I don't think that's the case. Even if I divide it by like a factor of four or something like that, I think the next 3 to 5 years is clear. But then after that, I agree with Chris Latner a lot that what's going to happen is we're going to see more and more custom ASICs. We already know that Amazon has some under development. Apple's already been doing it. Uh, Microsoft has talked about the fact that they're going to be doing it. So Tesla's already doing it. Google's already doing it. So like their customer base starts to dwindle. I would be surprised if Facebook's not already doing it, given their headsets. So there's a lead time on these things, but the winner is TSMC, not Nvidia.
Well, Warren Buffett agrees with you on that, I believe. Omar, it looked like from your emoji that you also agree that custom A6 is the primary challenge for Nvidia. But you own Nvidia stock, right? Even at this high PE. So if you agree with Meta on that, then why do you own Nvidia with such a large portion of your portfolio?
Well, it keeps going up, so that's kind of fun, you know. Um, let's see, it's about 13% of my portfolio, whereas Tesla is now about 30. So it's less than half the size of my Tesla position. So, maybe that should be reversed. Maybe I should have had 30% Nvidia. But, you know, um, Tesla FSD, which I love, is created using Nvidia chips, right? And that's just today. Maybe tomorrow will be something else, who knows? But the process of making FSD involves, buying Nvidia chips and then creating the model. So these chips can be used for a lot of things. I mean, it's kind of funny. They started out as like gaming graphics cards. So these cards were originally created so that you could play, Doom or whatever, play Halo. And then with AlexNet in 2012, they said, hey, we can train neural networks with these. And that was very sort of unconventional at the time. It kicked off, everything we've seen over the last 10 years. But it was mostly because it was available. Because people are playing a lot of video games, these cards are at Best Buy. You can go pick one up. You can order one from Amazon or whatever. They were readily available. Now, with AI becoming a major use case of its own, I do think that we're going to see more chips that are designed just for inference and training, rather than sort of, just using a GPU or something like that.
Thanks, Omar. So Nvidia, I saw a tweet the other day that said Nvidia rode the wave of gaming and now rode the wave of crypto and now is riding the wave of AI. And it's been the same CEO, right? The founder CEO who's been at the helm for all three of those waves. Is that correct?
Yeah.
Yeah. How would you compare him to Elon? Are they comparable? How would you compare and contrast the two CEOs?
Well, to be honest, I don't know all that much about Jensen. I know that I think like he's from Taiwan or something like that, and he's a great engineer. I went to school down in Santa Clara, so we had Intel and Nvidia as our sort of local chip making companies there. So that's also why I have a positive feeling about them. I followed them for some time. They would have events down in our school and give us tours and stuff like that. So they're a great company, a local company. They make amazing chips. They used to supply the computers that went into Teslas. Now Tesla makes their own computers. They supply a lot of training computers to Tesla. So, I mean, they're making the chips that are making FSD happen. They're training FSD 12 on these NVIDIA DGX systems. So, yeah, I think it's great. I mean, do they have a monopoly on stochastic gradient descent and matrix multiplication? Of course not. Anyone could make a chip and the market could change in the future, but um, they're just executing extremely well on, delivering those products to the market. But almost everybody who is buying these DGX products, they wish didn't have to. They're not happy customers the way you might buy a Tesla and it's expensive, but you're so happy with it. They're all thinking there needs to be some way for us to cut this because Nvidia is reporting 70% margins. So they're all trying to do their things. Google says they're doing 90% of their training on TPUs. Microsoft is apparently doing their own chips. Everybody and their mom's doing a chip. Tesla, of course, is doing Dojo. They have their own AI inference chip. So, and people are looking at using AMD and using other chips. There have been a lot of sort of open source projects to sort of have better compatibility and better utility out of the other, graphics cards that are much cheaper priced. But for now they have kind of a bit of a moat.
I think there's also other factors to consider. Like most developers are not going to build their own server farms. So most small startups, most mid-sized companies, they're going to end up using cloud offerings. As those cloud offerings start to offer their own custom chips and they start really incentivizing them from a financial perspective, we're going to see companies basically start using those as opposed to NVIDIA. Let's say, for sake of argument, let's say NVIDIA is twice as good as a custom Amazon chip in the future, and you can pay to use the Amazon chip, and it costs you less than half the price of using the NVIDIA chip. You're going to switch over, and theoretically, with 70% margins, there's a lot of room for Amazon to be able to make a chip that's maybe worse than NVIDIA, but still at a dollar per compute perspective, it's still more effective. There are very few use cases in AI that need that much performance in a real-time inference style uh, use case. Most of these cases are like batch processing, or they're more cost sensitive, and so that's probably what people are going to be optimizing.
Thank you. Nvidia stock is up about 30% year to date, and Tesla's down about 25% year to date. Do you guys think that this will change in the second half of 2020, in the rest of 2024, or do you think this will continue? Omar pointed to the momentum in Nvidia stock. I think that's a really good point. There's a momentum going on, high PE. Let's start with Meta.
Yeah, it's hard for me to say what the stock will do. I think very often, the more you know about the engineering side of things, the more easy it is to be wrong on what the rest of the market will do. Um, so yeah, I think momentum wise, looking at short term focus, things like that, NVIDIA will probably continue to do well. But longer term, the things I would look out for is if Amazon announces we've built a big data center with our own chipset, or Microsoft does a similar thing. We already know Google's offering a huge amount of TPUs, and TensorFlow and various other, formats make it easy to use those things. And we are starting to see a lot more papers coming out using JAX, even though um, TensorFlow didn't take off, JAX is taking off. And again, these are things that make porting to uh, other chipsets very easy. So the real thing to watch for is, in my opinion, is Amazon or Microsoft to a degree, but I would say probably Amazon's a bigger factor, launching their own custom chipset and making it available from a cloud perspective. And then the second thing I would watch for is the popularity of things that are targeting replacing CUDA, things like Mojo and various other things like that.
Omar, do those possibilities concern you as an Nvidia shareholder?
Well, I think as an Nvidia shareholder, it's very much kind of a bubble and bust sort of market where you have these various waves that people get super excited about. Oh my God, crypto. everybody's buying Nvidia GPUs to mine Ethereum. This is going to be huge. And oh, then suddenly the crypto market crashes and nobody wants to buy these GPUs anymore. And so with AI, it's sort of interesting because you have sort of the chat GPT moment that everybody talks about, where everybody said, oh my God, these LLMs are incredible. And I mean, they had GPT-3 for a while, but it was really the chat GPT moment where everyone realized it was incredible. So this basically kicked off a wave of spending. Everyone trying to train models, create these AI projects, create these AI features to try and make money. And this the sort of chatbot wars, Google's chatbot versus OpenAI's chatbot, who's got the best chatbot, and all this sort of stuff. Generative AI, and the cloud services buying a ton of these things. So you really have a ton of growth for Nvidia, just driven by the fact that everybody's placing all these orders for GPUs with the because it's so hyped up right now. Everybody wants to build these AI features. Essentially, the VCs take money from pension funds and retirement funds and things like that, and then they go give the money to the companies, and then the companies go give all the money to the cloud services, and then the cloud services give all the money to Nvidia. So the end product here is really the LLM or the AI product or somebody who's actually getting some value out of it. But when you sort of look at the hype about, super intelligence or that kind of thing, and then you look at today's LLMs, they're actually pretty stupid. So, just in a down to earth kind of basic unit economics business sense, is the cost of inference lower than the value the users are willing to pay for? And I'm not sure that's the case today. Of course, when ChatGPT launched, they famously said the costs are eye-watering. With features like Microsoft Copilot and stuff like that. I'm not sure how much that's changed, but I'm guessing they're still probably bleeding a lot of money on inference. And the number of people who are willing to pay an extra $20 a month or $30 a month for Office Copilot or whatever, I think this stuff is really being commoditized. You have really strong open source models. Mistral, a lot of people are building on Mistral. Llama 2, Meta says they're going to release Llama 3 for free. They say they want to train an AGI and release it for free. So, okay, how do you get the user to pay $20 a month when they could maybe just inference this on their MacBook and not pay anything, and have a model that's pretty decent, if not as good as the best class OpenAI model? So if the money at the end doesn't actually materialize, then the growth of the chip hardware is going to slow too. And you know there's two things are going to happen. One, the capability of the AI will improve dramatically to the point where it's creating so much economic value that it's no contest. Or two, companies will realize that it's a little bit harder to make money on this than they think. A lot of people look at software and they think, oh, big fat juicy software margins. You hire two coders wearing a hoodie and you give them, some Doritos, and they make an app that's worth $1 million. That's not what it's like in the AI world. To train a world class model, we're talking about millions of dollars spent on these training runs, right? So it's a very, very different set of economics than we're used to in software. And I hope we like achieve AGI and there's so much value, but it's also really easy to see that things could be incredible and really great, but still not live up to the hype. And this is why I kind of like Tesla as one of the most undervalued AI plays. Most of these other names are trading at all-time highs, the sort of Magnificent Seven tech names. And Tesla's trading at a significant discount, really. And it is a company that can actually make money in AI
Yeah.
because they have these cars and they can sell an FSD package and they can turn a profit.
Machine, do you have any thoughts on the matter? Welcome.
Yeah, If you can hear me okay, I'm standing outside a cliff by the ocean, so there might be waves crashing. But I had to.
Don't jump. Don't jump.
Well,
it's not worth it.
I had an amazing
The
experience.
stock will recover.
It's not hard to hear you, Machine. It sounds like you're not eating something right now.
Well, listen, when I heard Meta and Omar talking about Nvidia's PE ratio and misapplying it, I almost jumped off the cliff just from hearing such bad financial analysis. But I had an amazing experience because for the first time I stood on the edge of this cliff looking at the ocean and I just peed off the cliff. This was an amazing feeling. There's nothing more freeing than peeing in nature. But I would say this discussion on PE ratio with Nvidia, you really have to look at the quarterly earnings because there's such massive earnings growth over the past year that their earnings in the last quarter was like 3 or 4 times higher than it was a year ago. So if you look at trailing 12 months, it's really not useful because their earnings 4 quarters ago were like 50 cents. And the last quarter, it was $3.70. So if you took their last quarter, annualized it, they're operating at a PE ratio of like 42. Now, the question really becomes how much more growth is there going to be even in the next year? And I'm not an expert on this market, but when I hear all these points about why inevitably other players will come in and take a market share, I don't disagree. But I really find it hard to believe that these market players are going to significantly affect purchases of Nvidia chips over the next year. So the question becomes, are there other factors like China? What is stopping people from buying Nvidia chips in 2024? Because by the end of this year, if they have any more revenue growth and similar margins, then their earnings for the entire year of 2024 are going to be something
Okay,
like
thank you. Your sound quality is horrendous. Meta, this
Yeah,
guy comes in here and then he goes on about his stupid jokes and then goes on with his poor sound quality. And all he says is PE ratio, historical forward PE. That's all literally he said. And he said it in 20 minutes. Meta?
yeah. I think the key to understanding when you're looking at forward growth is I think everybody's looking at Nvidia like it's a software company. It's not a software company. They're painting all tech companies like they're the same thing. Silicon companies have forever been more like a commodity, in my opinion, than a moat. There will be a onslaught of competitive chips. Ultimately, it just comes down to dollars per compute. So the margins will compress. And we already see it, right? Google's already competing with TPUs, like Omar quoted. Their computers already on those TPUs. They've already opened up a lot of their TPUs to outside parties. And when they launched Gemini, they also launched so centers with more compute. And it's not like they're just going to toss their old chipsets away. So as those new chipsets are not being used, those older chipsets are not being used, those become available on the cheap. So these ASICs are just going to flood the market. And I think people are looking at NVIDIA like, even when Elon says Tesla's going to be spending billions of dollars into the future, I don't know that's billions of dollars necessarily only on NVIDIA. If at any point Dojo becomes cost competitive on a dollar basis with NVIDIA, why would they spend any more money on NVIDIA rather than buying more and more Dojo and driving that cost down for themselves? So I think every company is going to have application-specific stuff that they need to do, and that's going to drive the cost down. And while NVIDIA could be like the best generic solution for transformers, unless they compress their margins to be competitive, everybody else is just going to go with fabrication. And we already know Intel is already working on this, and there's a new startup that Sam Altman has invested in that's also trying to bring fabrication back to the United States. So Silicon Valley ever becomes, it's one of those things where once you've fabricated it, each individual circuit costs you less.
All right. Everybody has poor sound quality today. It's like a race.
I was
going to
gonna say.
Yeah. So
One
Omar,
last thing I want to say on
Omar,
this.
Omar, would you, before you say your piece, would you please summarize what Machine said and what Meta said and put it in plain English for the rest of us?
Well, Machine said that when you look at Nvidia's forward growth, they look cheap. And I would agree, assuming that growth materializes. I mean, this is a company that really has three big customers that are driving all their earnings growth. If you got one or two of these, and by the way, very smart customers to say, hey, we are, we're providing a service where, throw in your same training job and we can do it for a fraction of the cost or whatever on our Microsoft chips, then, you know, that could be an issue. I don't see that really happening anytime soon. But I mean, with Tesla, the way I kind of look at it is, you know, creating AI training supercomputers is just one thing Tesla does. It's sort of one of the startups within the company. And you can say, okay, well, Dojo's not anywhere near as successful as the NVIDIA DGX system, of course. And that's true. But they're going to continue working on it 1.5, 2, 3. I honestly would not count Pete Bannon out. And while NVIDIA is really dependent on other end customers, Tesla's kind of in a unique position with Dojo where they have so much demand for just by themselves for compute and so much ability to potentially monetize it with Optimus and the bot that they're not really in that position where they can get cut out. They're building this just for themselves. And I think if they can sell it to others, that's kind of a bonus. So when I think about sort of Nvidia and Tesla, and I agree, you don't want to just equate all tech companies. This is a commodity business. I mean, not a commodity business. It's a physical business, right? So software is very different. You have high margins. When you have something that's physical, sometimes you make too much. Sometimes you make too little. There's, the physical world, the physical market, the economy that affects these things. And, that creates financial issues that companies that are purely digital don't have to deal with. So, I'm cautious, but I'm holding. I think it would be kind of foolish to sell now with the momentum they have. But if I saw things, materially change, then I would consider trimming it down.
Machine, and then Henry, and then let's see if UC wants to join in the conversation on NVIDIA. Machine?
Yeah, I just think I agree with Omar's points. I agree with Meta's points. I just think they're are going to occur over a longer time frame, and I just think that possibly in the next year or so that it's going to mostly still be steady demand. I mean, I don't know that for sure, and so I'm going to be a little careful. I was more bullish on Nvidia when they were in the 400s, obviously because that's a cheaper value, and that happened with the same earnings. It's not like there was a new earnings report. They just went up, 30% since the last earnings report. You could have bought them 30% cheaper before, which I did. I bought them 20% ago. It was calls, so those are up 40%. So as of today, I exited this position because when a stock goes up 30% in a month, there's a decent chance of a correction, and everything else is at all-time highs. So I'm going to wait and see what comes out of their next earnings report and make a decision then. I'm just saying, big picture, to compare them to Tesla, one company has growing earnings with a clear path to higher valuation. Nvidia has a clear path to possibly, I'm just saying possibly, going up another 40% if their earnings this year come in a certain way, which is possible. Whereas Tesla, to argue that Tesla is a better PE ratio is insane. Tesla's PE ratio is 60, and it's decreasing quarter over quarter. So I'm not saying it's not a better investment trading wise right now, but in terms of like expecting a rise valuation wise, it's less likely in my opinion.
Henry, do you have any thoughts on what Meta, Machine, Omar have said? Would you like to kind of mix in your expertise in AMD as well?
Yeah, well, I'll just comment that, well, I kind of agree more with Machine here, because I think that NVIDIA is going to have this level of demand for way over a year, possibly 2, maybe 3 years more, because it takes a long time to qualify a chip, never mind engineering it, designing it, and prepping it to bring to market. I know that some of these chips everyone's talking about, they're going to be in-house chips, but it really takes at least a year for you to qualify. You got to qualify from a security point of view as well. It takes a really long time, and I think that Nvidia is going to have minimum 2 years of this level of demand and rising.
Okay.
And we saw
So
similar.
Henry
Yeah.
says, thank you, Henry. Henry
Yeah.
says, agrees with Machine that in the near term, 1 to 2 years, for the foreseeable future, Nvidia has the market on a lock. Nvidia is going to dominate AI chip training chip, especially space, for at least the next 2 years, and then we'll see if others can catch up. Let's say, from Henry's perspective, maybe AMD will come out with an AI inference chip that challenges Nvidia. Or from Meta's perspective, maybe these mega tech companies, especially Amazon and Microsoft, will introduce their own custom ASICs. But for the next year, as Omar said, momentum should help Nvidia's stock. I think that's a summary of all the points up to this point. Yutzi, what are your thoughts? Do you have any thoughts on Nvidia, AMD?
I think you summed it up pretty well. The only thing I was going to add was that I'd be a little less optimistic on Nvidia. Or actually, let me rephrase that. I'd be more optimistic on Nvidia if their margins weren't so high. Those are just going to be competed away, and I think you're right that they maybe have a advantage for a couple years. But I think some of these companies would probably want to pre-announce that they're going to start investing in some of their projects. I mean, you think about how much Meta spent in, not actually the Meta guy up here, how much Facebook spent on R&D in the last couple years on just dumb projects. I think you'll see a lot of that spending going to chips. So if you have 70% margins, competition will definitely lower that.
One thing about sort of trying to call the top, as Machine said, is you have to remember the median market participant is a little bit stupid. So a name will usually run a little bit further ahead or a little further below what you expect, I think, if you're informed, because the median participant is kind of uninformed in my experience. Like, I probably wouldn't have projected Tesla would have gotten to $1.2 trillion market cap when it did. But I think, you know, when a name is on a run, like Nvidia is, it tends to go a little bit further than any rational investor would imagine, and then correct.
Meta, anything else to add?
I think the only thing I would add is I agree that at least the next year looks pretty solid. I think Utzi's point is very valid that like Amazon could come out tomorrow. Let's say negotiations are in flight with Nvidia and they're not going well. They could come out tomorrow and announce a big deal with AMD, or they could announce their own chipsets, which is known that they've been working on because they've got some previous versions of them already available in the cloud. But suppose that happens, that's a big potential headwind. And so for me, I think the next year, I agree, Nvidia is probably going to be there doing well. I'm not going to speak to like the stock momentum. I think that's a valid point. But I would say the maximum is 4 years. So when you ask me why I don't invest in it, it's just when my investment style is to buy and never sell. So I just don't want to buy Nvidia for that reason.
Got it. Just a quick reminder, at the top of your screens, I posted a link to my YouTube channel, trying to get to 1,000 subscribers in order to be able to monetize. If you could please like and repost that post at the top, I would appreciate it. That's a really good discussion on NVIDIA, AMD, custom ASICs, and we don't have to cover everything today. So let's kind of leave that there. I want to talk to Machine a little bit about tomorrow's Fed meeting. So moving Meta down, so he focuses on his drive, moving Henry down, and Machine. What are your thoughts for tomorrow's Fed meeting?
My thoughts are I'm of two minds. One is being selfish by the fact that I own a ton of Tesla Leaps at these share prices, and that part of me wants them to be dovish. I think it's very unlikely that they have a rate cut this week. If they did, obviously, that would be very dovish and very bullish for the market short term. I expect them to be a little, similarly positive as they were last time. I don't know if that's enough to move the market, since the surprise last time was how dovish they sounded. They would have to take it a step further and maybe more explicitly state a plan for a rate cut in the first half of this year, or something more specific, I think, for it to be taken as dovish. But I find it hard to believe they're going to be hawkish, given there are some signs of economy slowing down. So that's my bullish stance on the fact that my net positioning right now is very bullish. However, if I look at my other half is, if I look at inflation as a whole, it looks pretty healthy to me. I don't see rapid deflation. There's no breadth of deflation. I think most segments are operating in a reasonable small inflation, plus or minus the target range. Even housing, like I just checked today, the House HAUS index, which I believe you forwarded to me once, which basically normalizes by looking at a 3-bedroom, 2-bath, 1,500 square foot house across the U.S. and looking at those price changes. So you fixed the specs of the house, and that index, it had dropped last year to be negative, and now it's back positive. So housing isn't necessarily in a deflationary point. We think cars are, but a lot of the other categories aren't. So if I look at that aspect and look at the economy doing well enough, I would ask, why would the Fed cut rates early, given that those things are not drastically falling? So those are my kind of two minds going into it, and I don't know where the Fed's going to end up, but I imagine they're just going to be pretty neutral.
Interesting. So you don't expect them to be hawkish. So you believe they're going to close the door for more rate hikes tomorrow, and the market is expecting a rate cut by May. Ed Yardeni says probably no rate cuts this year.
Who said that?
Ed Yardeni.
Well, I think the market would not be happy if they realized that that's the case.
Yeah. I mean, the housing prices, home prices is a wild card here. They're going up still, and inventories are still lower than normal. That's really the only issue that's facing Fed right now in terms of inflation. The question is, and nobody knows the answer to this question, I don't think. I don't know the answer, and I don't know many people do. The question is, what happens to home prices if mortgage rates decline to a 5 handle? Right now, they're 6 point something. And all realtors, I mean, they have an optimism bias, obviously, but all realtors I talk to say, if it goes to a 5 handle, we're going to see explosion in housing demand. And we have unemployment rate pretty low still. Today we got the JOLTS number. Job openings number is still above 9 million. We see all these posts about companies firing, laying off people, but when you look up their number of employees, they're only laying off 1 to 2% of their employees, which is kind of normal in a given year. So if the employment market is strong and mortgage rates come down to 5 handle or maybe even a 4 handle, and you have low housing inventories, and majority of your core inflation is shelter, then how is that going to play out? Go ahead.
I just fundamentally think that housing, the house ownership, I just feel like shouldn't be a core piece of CPI or the decision making around inflation, in my opinion, because I believe that decisions around inflation should be about the fear of assets or of anything going spiraling out of control, whether it's inflationary or deflationary. And we know everyone's very afraid of deflation because we haven't really had hyperinflation in the U.S. and I would be too. But the fact is that there's such deep demand for housing at any price. The price elasticity is extremely high, in my opinion, that I have no fear that if prices were tumbling down for a year or 2 years, that people would suddenly be afraid and they would hold off purchase even longer because they think it's going to keep going down. I think no one thinks that way about housing. And therefore, I think there's no deflationary fear around housing. So I think it should just be discarded in terms of being afraid, oh, what prices are going down for housing, let's cut. Now, in the opposite way, I think maybe they should consider it. If it's going up a lot and people can't afford it, like, and it just limits the supply, like, is that healthy? Like, probably not. But I don't know if the Fed should be the answer to that. The solution's more build more housing, in my opinion. Then if you get to other assets like cars, I could believe deflation being a problem, that people would hold off purchases of cars if they think it's going to be cheaper the next year or two, and that can cause a lot of economic hardship. So I just believe we need to focus on these categories that really would affect consumer behavior if there was deflation. So that's why I'm looking at the data now, and I don't see it in most categories other than maybe transport. But transport went up, right? Housing, cars prices went up a lot in the last year or two, or 2 years ago. So right now, I mean, having some deflation temporarily is, I don't think, a big deal. If it kept going, then that might spiral out of control. But for now, I would say Fed just stop raising rates. Maybe you will cut a little bit this year just to be safe, but no massive cuts.
Yeah, I agree with most of what you said. I think it's an important point. I want to underline what you just said, that there has been a lot of inflation in the last 3-4 years. Even if there is some deflation in the last few months, people are still talking about inflation in this era. They're not talking about, car price coming down, I'm going to wait to buy. Or home prices are coming down, I'm going to wait to buy. They're not talking about that. The conversation is still around how much inflation there has been in the last 4 years, which is an interesting behavioral economics observation, I think. Machine?
Yeah, I think part of that is because people's net purchasing power has gone down. Uh, even though now inflation is steady, the net effect of the inflation over the last 3 years, combined with, yes, there was wage growth, but not as much, at least what I've observed, that people have less purchasing power. And yeah, congrats, it's not inflating further, but now you have less purchasing power, and I think that's partially contributed to people not buying as expensive cars, electric cars. And there's not really any obvious solution to that. Like, you find lower interest rates so that people can afford more car, but um, that may just spike up inflation in general. So it's unfortunate for investing in a automotive stock. It's just not ideal time.
Omar, would you like to add anything to the Mac conversation? Otherwise, we're going to end the space.
Yeah, FOMC week is always exciting. Anything could happen. So it'll be one to watch for sure. Maybe we'll play it in the space or in a different space if we're here. And I think really we are going to see rate cuts this year, but the market may have gotten a little bit overexcited about the possibility of rate cuts. it doesn't seem like it's going to happen in March. I think futures are putting like a 48% chance on a March rate cut, which, I think seems a little bit high, honestly. Um, they're at about 90% for May, which, you know, I think would be pretty incredible, all things considered. You'd have, kind of a pattern uh, similar to last year, really, in the markets, I think, if that started to happen. And there seems to be sort of a lot of doubt. So with GDP growth at sort of 3%, inflation looking good, economic indicators are generally pretty sound. There isn't a whole lot of crisis prompting them to cut. So some softening in conditions could be encouraging. It could increase the chance of a March or a May rate cut, but we'll really have to see what the FOMC has to say this week.
I pinned at the top of your screens a post by Macro Analyst. That's my other account. I created Macro Analyst in order to isolate the macroeconomics tweets to that account and not bother my Value Analyst followers with macro stuff. So if you're interested in this kind of macro talk, follow Macro Analyst. That's at the top of your screens. Yeah, I think what it's going to come down to is the interest rates are high right now. I mean, they're high, above 5%. And inflation has declined below 2% already by many measures, including 3-month annualized, 6-month annualized, PCE, CPI, PPI, Trueflation. All of those show inflation is currently below 2%. So real interest rates, which is nominal interest rates minus inflation, is very high. We're talking more than 3% real interest rate. That's very high in an economy when you already have lower than 2% inflation. And I think the Fed will worry about low housing supply, low housing inventories, and discount the fact that there's a tsunami of multifamily units coming to market throughout the coming months. And I think the Fed will wrongly keep rates too high for too long. I hope that's not the case, but we'll see. All right, thank you very much, everybody. Great conversation today, and I will talk to you all tomorrow. Take care.